All right, guys. So welcome back. As promised, right? I am doing the questions, the solutions to the 2023 POA paper. I'm at question 4, right? And question 4, right, is the question that persons, give up, right? This is the question that some persons said that they gave up when they saw the question. But let's look at the question. It's fairly doable and manageable, right? And so we're going to go through it, right? Remember to like, subscribe, share with your friends, and leave in the comments what the answers that you put. And I like to hear the stories. All right. Okay. So question 4 begin. Question 4, as a matter of fact, the first part of question 4, right? It begins by talking about Brooklyn Sal is the owner of 2 businesses, Brooks Technologies and Brookies Computer Supplies Limited. Brooks Technologies manufactures components used in the production of computer monitors. The forecast for sales of the components during each quarter of 2023 are presented in the following table. So we are given the forecast, right, for the different quarters and the amount of units. Now listen to me, right? This is really, they're asking you about sales forecast or production budget and stuff like that, right? Now, whilst it is very new to the syllabus, it is fairly new to the syllabus, and you will realize that they don't ascribe a lot of marks to it because it is new to the syllabus. They don't normally ascribe a lot of marks to the new content, right, in the syllabus. And so the production budget that they ask us to do, right, it's only 6 marks. So everything else in the question, right, I think you should be able to manage, except the production budget, right? It is new on the syllabus. We don't have any past paper with this question, with a question like this, right? I think last year or the year before, there was a cash flow question, right? That was also new. And so now teachers are going to start preparing. So if you did not do this question, don't stress yourself. I mean, not a lot of persons would have done this question, all right? Truth be told. All right, so let's look at it though. So Brooklyn's policies is to maintain a closing inventory sufficient to cover 25% of the next quarter's sales. This bit of information is very important for you to do this production budget. It says the opening inventory for the components on January 1, 2023 will be 1,500 units. This again, very important information that they give us. Then the first part of it now, it says prepare a production budget for each of the first 2 quarters of 2023 for the components. Now I can tell you that even for next year, if this question come again, they may not ask you to do just 2 years. They may ask you to do more, right? Because they're just introducing it to you now. That is why it's only 6 marks. All right. Now, if you look at it now, we are given some information. We are given the opening inventory for the first quarter, right? This is it right there, right? We are also given information to calculate the closing inventory, right? And we are also given the amount of units to be sold, right? It's $6,000. We get that $6,000 from the table, from the first quarter. See here, $6,000. All right. Now we would need to calculate the production that is required. That is why it's a production budget, right? Now you may ask, how did I get the $2,000 right here, right? It actually says that what the policy is to maintain a closing inventory sufficient to cover 25% of the next quarter's salary. So what you have to do is you have to find out 25% of, did I say salary? Next quarter sales. You have to find 25% of the next quarter 2, the sales, right? So if you look at the table, you'll realize that the next quarter, right, would be 8,000 units they expect to sell. So you'd have to find 25% of that, and no, that would be the closing inventory for the first quarter. So that's 2,000. This is the workout right here. So it's 2,000. So now that we have the 2,000, we have the 6,000, right? And you may say, so sir, how do I know that I need to have the sales? There is a format, right? There's a format in the textbook actually, right, that you should use, right? There is a format here, just like with the cash flow, there's a format for it, just the same, all right? So the sales would go right here, 6,000. We would not know the production required, and we would not know this figure right here, which really don't have a name, right? So if we know these 3 figures, 1, 2, 3, all we need to do now, we're going to add the 6,000 to the 8,000. to get to the 2,000 to get the $8,000 here. So we know this figure. Then we can deduce, right? So we are reverse engineering this table. So we can deduce then that, okay, if the opening inventory plus the production that is required give us 8,000, then how do we find out the production that is required? All we simply need to do is to subtract the 1,500 from the 8,000, and we get the 6,500, which is the production that is required, right? The opening inventory for Q2, we already calculated, it's the same 2,000, so you put the 2,000 there, right? You would have add this 3,000 here, we would have calculated this 3,000 by finding 25% of 12,000, which is the third quarter, right? 25% of the 12,000. And that is how we got the 3,000 here. And then now we know the sales already for the second quarter. So we reverse engineer again. So you add the 8 to the 3, you get 11, subtract the 2 from the 11, you get the 9, right? And that's it. That's 6 marks, right? Now, as I said, if you don't get it, don't beat up yourself, right? It's only 6 marks. They are just introducing it to us. I'm sure more teachers will be teaching it in the coming school year. So more persons are going to be prepared, right, for questions like this cash flow and all these things. All right. So that's basically for that one. So you didn't have to get so flustered. And one person said that they just said that this is it when they saw the production budget. Come on, right? That was humorous though. So we're moving on. Part 2 of question 4A, it's asking you to calculate the markup, right, on one component. So the one component is sold for $65 and it costs $50 to make one. That's a unit cost, right? They're asking us to calculate the markup. And so if you know the markup formula, right, which is selling price minus the unit cost divided by the unit cost multiplied by 100 to get the percentage. So it would be $15. So you would subtract the 50 from the 65, you get 15 divided by the unit cost, which is 50, multiplied by 100, so 30%, right? So that's easy, 2 marks. I think you learned this in math just the same, so it should not be that difficult, right, for a good accounting student. All right. Now, we move on to the next part of the question, right? So this part of the question is actually testing your knowledge on the effect that errors have on the income statement and the balance sheet, the statement of financial position. So this would kind of come into correction of error, suspense type of thing, but it's not a lot. They don't test it a lot. So if you realize that they are trying to test a lot of things, a lot of topics in the syllabus, but then, they spread out the marks so much that, yeah, it will be difficult for you to just study one topic, right, in preparation for this paper. And that's what they're trying to eliminate as a matter of fact. So it says on December 31, 2022, Brooklyn discovered the following errors in the books of Brookie Computer Supplies Limited. Error A, the balance of 12,436 for office furniture was recorded in the ledger as 12,364, and they do it for you, right? Right? So they give us the errors, and they are saying we should complete the table by putting a tick in the correct column to indicate the effect of the errors on non-current assets and profit for the year. And they do the first example. They did the first example for you. So let's look at part B now. Error B. It says an item of capital expenditure had been recorded as revenue expenditure. Now, capital expenditure is, for example, you are buying machinery and stuff like that, right? So you know that would have implications on your income statement, yeah? Would have implication on your not your income statement, sorry, on your statement of financial position, right? It really wouldn't trouble your income statement per se, right? So it says that an item of capital expenditure had been recorded as revenue expenditure. Revenue expenditure is like cost of goods sold. It is the cost of operating the business. It's really what we call regular expenses, so to speak. Now, if your expenses are increasing, right, then it's going to have an effect on your profit, right? Because if your expenses go up, your profits will come down. You get what I'm saying? And so if your revenue expenditure is overstated, then it means that your profits will be understated, hence this tick, right? If your capital expenditure was recorded elsewhere, it means that your non-current assets would be understated, right? Because you wouldn't record it, so it wouldn't be there, right? So that is why your non-current assets will be understated. Error C, an item of capital expenditure had been overstated in the books. Obviously, it's going to overstate your non-current assets. It's not going to have an effect on your profits, as I said earlier. So that's simple 4 marks still, truth be told. Right, then they said identify 2 payment methods that Brooklyn can use to pay suppliers of Brooks Technologies for tools purchased on credit. And this is simple, right? Any type of payment method, cash, check, electronic money transfer could suffice, right? Next one, 4C, it says Brooklyn maintains a full set of books of accounts, purchases ledger account, and a sales ledger control account are prepared at the end of every month. So they're trying to put in control accounts here right now, right? And the entire part of C is control account, which value is what? 6 marks. I mean, come on, right? So they're asking you to talk about 2 uses of control account in the accounting process. So they're basically asking about the advantages of control account. So it checks the accuracy of the purchases and sales ledger. It prevents fraud and it provides information for management. Any 2 could work, right? We are given some balances here from the books of Brookie Computer Sales Supplies Limited, right? And then they are saying that we should record the above as they would appear in the sales ledger receivable control account, right? So, again, this is pretty simple if you know a control account, especially sales ledger, well, any type of control account, right? So for the first one, refund to trade receivables, right? So you will make a debit entry, right? Contra items transfer to the purchases ledger, right? That would be a credit entry. Bad debt, that would be a credit entry in the sales ledger. Interest charge and overdue accounts would be a debit entry. And so that's easy 4 marks allocated, right? So overall, question 4, guys, truth be told, question 4 was not a difficult question, right? The first part may have thrown persons, but you could still have gotten a good accounting student should be able to get at least 14 out of that 20 marks, right? Yeah, and with teaching and production budget, then a good accounting student should be able to get full marks for this question. It was really not a difficult question, I'm telling you. Not a difficult question. Let me know what you think in the comments below. All right? Well, good. And you take care. See you tomorrow for the next one.